Good afternoon. It is Wednesday, November 8th, 1:30 p.m. Saw a little bit of an interesting article here last night. Buy Bitcoin beats buy gold in Google search trends. The online search phrase buy Bitcoin is now more popular than buy gold, according to the latest data from Google Trends. So more people are searching how to buy Bitcoin as opposed to how to buy gold. The tide began to change in favor of Bitcoin only in the spring of the year, with buy gold search phrase completely dominating the field prior to that. That's pretty interesting too. So prior to the spring of this year, buy gold was dominating the field. So you would think everybody's interested in buying gold, but yet the price of gold doesn't go anywhere. But now it's buy Bitcoin, right? Everybody wants to get on the bandwagon. On average, gold still wins out in 2017, but this might not be for long, as shown on the Google Trends chart. All right, so since the spring, buy gold has been pretty much flat, where buy Bitcoin is really starting to take off. Gold prices have had a good year so far, up 11%. The month of September was the main highlight, with the yellow metal reaching a one-year high, but then retreating below 1,300. December COMEX gold was last seen trading at 1277. Blah, 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 blah. Bitcoin, on the other hand, surged more than sevenfold in 2017, breaking all imaginable records, including the 5,000, 6,000, and even 7,000 levels for the very first time. The other day, I was telling you about that headline on Zero Hedge, Bitcoin tumbles. I looked at it, it was 7,000. What are they talking about, tumble? It's back up to 7,500. So that's it. This looks like the mania phase here. Is that a contrary indicator? Everybody's going in and searching how to buy Bitcoin. The sheep always get slaughtered, people. Okay? The sheep always miss the wedding and show up for the funeral. Okay? It's always the way it is. All right? So now everybody's just, how do I buy Bitcoin? I got to get my Bitcoin. It's going to $1 million. Okay, here it is. It's the same old, same old. So yield curve is flattening again. Got to watch that. But what I really wanted to talk about today, this rigging of these markets, which is so obvious, so blatant, it's so in your face. And yet there are some people, just go with the rigging. Come on, who are they kidding? Just go with the rigging, okay? From an old-time professional horse player, okay, a lot of races could be fixed. And people will say, well, what does it matter? Maybe you have just as good a chance to pick the horse that's fixed than the one that's not. No, that's ridiculous. That's no way to approach anything, okay? So these people, just go with the rigging. Yeah, we know it's rigged. Just play the rig. Come on, just play the rig. Gold right now is up 790. Okay? It hit a high at 1287. All right? And they're going to defend this level. Okay, at all costs. They're going to throw everything at gold again. Okay? The bears are trying to take it down. Gold is showing good resistance. It's going back up. It's in this tight range I keep telling you about. All right? It's really not going anywhere. But the bears are having trouble breaking it. And the bulls, by the same token, are having trouble breaking out. All right, and that's what I see here again today. Made a nice move. It was up about $13, okay, and then it starts. Then they try to take it down. And they might take it down. It's already coming back down. There's a fight here, people. I mean, because if the bulls can take out this 1285 level, all right, then the next level is 1300. So it's just another line in the sand. All right? But this whole thing is rigged. It's so obvious. It's so obvious. All right? You know how I like to quote The Big Short, you know, and again, I say, I don't know how many times I've said, if you haven't seen it, I recommend you watch it because you get so much out of it. All right? But that Mark Baum and his group, they're about to buy the swaps, the credit default swaps. The guy, Mark Baum, it goes to Florida. He sees there's this huge housing bubble. He calls up his partner, well, the guy that works for him, and says, I buy the swaps, right? So that guy makes a phone call, right, to the hedge fund guy, right? He says, okay, I got one last question for you. How are you screwing us? Okay? He didn't use the word screw. That's what he said. I got one last question for you. How are you screwing us? Right? Guy says, I'm not screwing you. I'm making love to you. Yeah, right. And then he says, all right, we'll buy your swaps, all right? But you got to tell us how you're screwing us, all right? And that's what it is. All right, I'll buy gold, but tell me how you're screwing me, okay? People who aren't familiar with the London Gold Pool, okay? This is straight out of Wikipedia. In November 1961, 8 nations agreed on a system of regulating the price of gold. They're going to try to regulate gold. I mean, here it is. This is not a free market. Okay? This is just a fact. 8 nations agreed on a system of regulating the price of gold and defending the $35 per ounce price. They're defending the $35 an ounce price through measures of targeted selling and buying of gold on the world markets. For this purpose, each nation provided a contribution of the precious metal into the London Gold Pool, led by the United States pledging to match all other contributions on a one-to-one basis, and thus contributing 50% of the pool. By 1965, the pool was increasingly unable to balance the outflow of gold reserves with buybacks. I mean, if people... what do I say all the time? I haven't said it in a while. What's the only thing that matters, people? Value and edge. Value and edge. Okay? They're trying to defend $35 an ounce, and people are going to buy it because there's value there, and they can't defend it. Just like now they're trying to defend this 1285 level. Okay? They want to manage it. They want to suppress it. By 1965, it took 4 years. If we're 4 years into this manipulation, this suppression by this London Gold Pool. By 1965, the pool was increasingly unable to balance the outflow of gold reserves with buybacks. Excessive inflation of the U.S. money supply, in part to fund the Vietnam War, led to the U.S. no longer being able to redeem foreign-held dollars into gold, as the world's gold reserves had not grown in relation, and the payment deficit had grown to $3 billion. Thus, the London Gold Pool came under increased pressures of failing, causing France to announce in 1967 a withdrawal from the agreements and moving large amounts of gold from New York to Paris. In 1967, the devaluation of the British currency, followed by another run on gold and an attack on the pound, was one of the final triggers for the collapse of the pooling arrangements. By 1968, international financial system moving toward a crisis more dangerous than any since 1931. This is all in an effort to manage the price of gold. Despite policy support and market efforts by the United States, the 1967 attack on the British pound and a run on gold forced the British government to devalue the pound by more than 14%. Further protective measures in the U.S. tried to avert a continued run on gold and attacks on the dollar. On Thursday, March 14, 1968, a Thursday evening, the United States requested the British government that the London gold markets be closed the following day to combat the heavy demand for gold. They'll even close the market if people want to buy it. This is out and out in your face manipulation. Nothing has changed. As a reaction to the temporary closure of the London gold pool, resulting instability in the gold market, Swiss franc immediately to manipulate the effects of the banking system. Blah 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 blah. This is a long article, okay, and I really suggest you read it. Okay, it all had to do with this Bretton Woods system. Okay, the London gold pool was the pooling of gold reserves by a group of 8 central banks in the United States, 7 in European countries. Okay, 1961. To cooperate the maintaining of the Bretton Woods system of a fixed rate convertible currencies and defending the gold price at $35. Okay? Ultimately, it blew up. It blew up. I just want to mention 3 lessons from the London gold pool. The ill-fated London gold pool affords us many clear lessons today. 1. Manipulation of markets by governments aided by central bankers and powerful financial institutions does exist, especially when nations, currencies, and particularly the world's reserve currency are at risk. As stated at the outset, throughout all of history, governments have eventually become deeply involved in the free market process for their own ends. It is not unreasonable to expect that if governments become heavily involved in suppressing the price of gold in the 1960s, there is no reason why they would not today. History has conclusively shown that manipulation of the free market process ultimately fails. No amount of government control, regulation, or price manipulation can change the workings of the free market over the long term. The London gold pool being no exception. No amount of gold airshipped to market by the gold pool could satisfy demand when investors decided en masse to storm the market. Can this happen again, people? Can this happen again? I think it can. Those behind orchestrating market intervention suffer great loss when their efforts eventually end. By the time the gold pool was officially disbanded in early 1968, it had cost the member countries many billions of dollars. The Bank of England never again regained its former position and prestige within the world gold market after the collapse of the London gold pool. As one London bullion dealer put it, the Bank of England are no longer the masters. They are just a post office or warehouse where gold is stored before it comes to the market. Markets have been artificially capped, catapult dramatically when market suppression ends. In the 12 years from 1968 to the peak of the bull market, the price of gold had rallied 2,300%. It has been said that the greater and the longer the manipulation, the greater the eventual price is going to be. Today, with far greater amounts of gold involved in the price suppression scheme, 10,000 to 15,000 tons versus 3,000 tons when the gold pool era, over a longer period of time and with far more at stake, it can only be concluded that the eventual price of gold may well run higher than 2,300% of the late 60s and 70s. At today's price, a similar move of just 2,300% would price gold at a staggering $6,400 an ounce. Okay? So, value and edge. These markets are rigged. I'll buy your gold, but tell me how you're screwing me. Okay? And I believe when this manipulation ends, it's not going to end with a whimper. It's going to end with a bang. Okay? I don't know when it's going to end. Okay? So I'm not going to be on the position, oh, just go with the rigging. No. I know it's rigged. Tell me how you're screwing me. Okay? I'm not playing the rig. Okay? I'll go down with the ship, like I said before. They're going to defend 1285 here. They'll play their games with the COMEX, right? And they'll continue to do that. But eventually, distortions happen. The free market ultimately will win out because of the distortions, okay? And when this thing finally breaks, these levels that I'm looking at, I think it's going to fly, okay? So that's it, people. I'll buy your gold. Just tell me how you're screwing me, okay? Bitcoin getting more hits than gold. Buy Bitcoin. Boy, I'll buy your Bitcoin. Just tell me how you're going to screw me, though, okay? The sheep always miss the wedding, and they show up for the funeral, okay? Beautiful day out there, people. Get out, take a walk if you can. Ciao.